and top-down analysis. This is like people don't talk about this often, but it's probably like it's the basis of trading. If you can't understand um, this, then it's hard to understand how you find this setup. There are, the first step is like trading is like three components. Component one is like trend analysis. So one is this, right? It's trend analysis. Two is going to be supply and demand, S&D. And then three is understanding price action, PA. Those are like the three components of any strategy. Then that's probably like 20%. And then everything else is 80% psychology. Everything else besides that, all the stuff that you kind of learn with trading emotions, understanding the market, 80%. But what we're going through today is going to be one, which is going to be trend analysis, top-down analysis, creating setups, having an understanding of what the market's going to do before it does it, right? That's what trend analysis is. It's trying to find insight using current data to understand what can happen going forward. That's the most important thing to understand as a trader, right? And it's not forecasting; it's more of just understanding if-then statements. So we're going to go over that. That's the game plan for today. But just so everybody understands, how comfortable are you guys with supply and demand? Do you guys this was the last lesson we had was on supply and demand. That was a big class we had last time, and we covered everything that I know about supply and demand. This was a very, very good lesson. And we talked about what makes a resistance, and what makes a support. We talked about how, there are key metrics within supply and demand, being support being a individual level, right? A singular level and resisting level, and then supply just being a zone, right? A zone of resistance or a zone of support, right? That's all really supply and demand is. And it's just about going back to those larger timeframes and finding those key areas that there are many interactions with, right? So that's all supply and demand really is. Then we talked about what defines whether a key level is a key level. And the general mechanic is to look for, right? The first thing we look for is something called interactions, right? So interactions, I don't know why I'm drawing this out, interactions. What this is basically, if you have an area on the chart where there are multiple wicks, right? So if you have two or more wicks, right, that forms a clear resistance, right? Or two or more wicks to the downside, that forms a clear resistance to the as support, right? That is all we're really looking for. The more interactions, the more key that level is. And then it takes a step further when you go to supply and demand. It's just understanding that not everything's going to be perfect, right? You're going to have levels in your chart that act as maybe you find a clear resistance, but maybe it's not perfect at your resistance. Maybe you've a level here, right? But then the next level is over here, which is you can see is like a gap between these two lines, and that's where we form a zone, which would be obviously supply. Same thing goes with demand, right? Maybe you have a wick here and a wick here, and you can see that it's not perfect, right? So maybe you draw that as a zone in your chart because it's horrible drawing. But the idea here is that supply and demand is basically just zones of support and resistance. And what we're looking for are these interactions on the chart, understanding where these interactions are coming in. So if you're looking at, let's just say a chart on SPY, for example, right? You can see here, right? Look to see where there are interactions. You can see here very, very easily in the chart. Look at the interactions here at 420, 420, 420, 420, right? So you know that there's going to be a very clear shelf at 420, right? You can look at this like different shelves in the market, right? You can see here, maybe there's a very clear shelf here at 360, right? You can see a shelf here at 460, a shelf here at 480, right? We're just looking for areas where there are multiple interactions. Multiple interactions constitutes key levels. Key levels are done from larger time frames, right? So we're going to go start off on a larger time frame, like the daily, the 4-hour, and then we're going to move down to smaller time frames. And this is going to break us into today's topic, which is top-down analysis. Top-down analysis is the process of going from time frame to time frame to understand what the market is doing and where those key levels are. So That is where we are going into today. Now, let me just quickly finish off with this. Just want to show this again, another chart here, right? Understand, because if you guys don't understand supply and demand, today's lesson is going to be like hieroglyphics, right? It's going to be very foreign. So I want you to understand key levels. We're just looking for interactions, right? You can see here 444, very big level in the market. And you know that if we lose 444, we probably go back to 430, right? This is what we look for, right? We look for these clear shelves in the market, right? Look at this. You can see a swing low over here at 433 to 430, very big demand here. So if we pump back to it, it's very likely we see reaction off that level. We're just looking for areas on the chart where there are many interactions. Interactions equals key level. That's all it really is. The second component of supply and demand is called the parabolic move. I've talked about this a million times. You guys kind of know what it is already. Basically, I just look for areas where there are sharp reversals, right? I don't want to spend too much time on this because I want to get into today's lesson. Are you guys cool with me moving on to top-down analysis in today's lesson? Top-down analysis, trend analysis. Can I jump into that? Okay. All right. I don't even know why I asked that, because if someone said no, I probably still would have went forward, but we'll go into it. So top-down analysis. That is the game plan for today. Move my face over here. So understanding top-down analysis, and most importantly, I said today's lessons on top-down analysis, and that is true, but it's only semi-true because the majority of today is going to be talking about trend analysis and understanding one very key concept called market structure. We're going to be talking about market structure today, understanding what you do with your key. Once you have your key levels, what you do with them, because that's the next step. You have your key levels. Now it's understanding what's happening in the market, what the overall structure is. Then you can create your trades. So we're going to talk about that. So the first understanding you have to know about is what top-down analysis is, and everyone kind of knows it. I'm sure everyone knows it. You start off on the 1 day time frame. So we're missing the 1 day time frame. We start off on the daily time frame for me. And what we're going to do is we're going to move down from the daily to the 4 hour to the hourly, down to the smallest time frame of the 15-minute time frame. And we are doing this for one reason and one reason only. We're doing it to understand not only what's happening there on a larger picture, but what also is happening there on a smaller picture. So you can sort of create real ideas here by starting on a larger time frame and then going down to a smaller time frame. The reason why I say that is because if we focus in just on smaller time frames, you're gonna tell me, well, hey, Brett, well, we have a clear resistance here and a clear support here. I'm gonna look for calls above this level and maybe puts below this level, right? Or maybe I'll look for a bounce over here, right? Because that's a recent swing low. Well, if you just look at the 15-minute time frame, yes, that's entirely correct. But then if you go down to if you go up to a larger time frame, understand that larger picture that's at play here, you're going to understand we're in a very clear downtrend. We are making lower highs, lower lows, lower highs, lower lows, lower highs, and we are potentially opening the door up for another lower low, right? That's what we're seeing here in the 4 hour time frame. On the hourly time frame, it's supporting that thesis. So we're seeing downtrend. On the hourly time frame, we're seeing the same thing: higher high, lower low, lower high, lower low. Right? Big move down, followed by big move down. Clear downtrends. Again, we have a downtrend supported here. Then on the 15-minute time frame, now that you understand that we're in a clear downtrend on those larger time frames, you're going to approach this 15-minute time frame in a completely different mindset. Because if you are stuck on these smaller time frames, I see this, right? People all the time are like, hey, Brett, Mike, Felony, Arav, Aristotle, why are you fighting the trend right now? Well, it's because we're not fighting the trend. We're looking at the larger time frame analysis, and we're seeing that, you know, maybe the market's going a little bit higher on that 15-minute time frame, and people are trying to buy calls. But what we see is a larger time frame 4 hour downtrend and a larger time frame hourly downtrend. Therefore, going short here at the highs is not a bad idea, right? It's not a bad idea. So we're going to approach that 15-minute time frame not with the idea that we're looking for breaking retest for upside for calls, but probably looking for puts at resistance for a move lower, or a breakdown of this support for a move lower, right? That's how we're going to be approaching the market. So the importance of top-down analysis is that it's going to help you create real trade plans, not just based upon the one smaller time frame that we all look at, which is the 5 and 15 minute time frame. So again, to repeat this, because this is the most important thing. We conduct multi-time frame analysis to create trade plans. Because if you look at just a smaller time frame, or even if you just look at if you just look at a daily time frame and you're stuck on the daily time frame, you're gonna miss all those intraday opportunities. So it's not just screw smaller time frames, because that's not what this is about. It's about incorporating all of those time frames together to create a concise and clear trade plan. And we're going to get into this today. That is our sort of focus today, is going to be making it so everybody understands how to conduct multi-time frame analysis to create a real trade plan. So is everybody ready? Everybody's ready to move forward? You guys are good? You understand this concept? Okay. All right. So again, I know this is not fun. It's not exciting stuff, but this is really important. Okay. You guys have a lot of energy today on this Sunday evening. What time is it for you guys? Where you all are at? What time is it for you guys? For me, it's 6:15, 3 p.m., 5 p.m., 5 p.m. Wow. Someone's in England, so it's 11 o'clock in England. Wow, midnight, crazy. Well, I'm glad you guys are all here. Okay. So I want you to understand something, right? So I want to go through some terms now. Price action and market structure are different. Price action and market structure are different. We just talked about market structure. So and we're going to get into it in more detail. But remember, I was going over the idea that we have a high formed and then a lower low, right? So as long as we do not break above these recent swing highs or swing lows, we are still in that overall downtrend, right? That's market structure. Market structure is looking at those recent swing high, recent swing low, recent swing high, recent swing low. It's identifying those areas. Swing high, swing high, swing high, right? And as long as we can't break above, right, either the recent swing low or the recent swing high, then we're maintaining that overall structure, the downtrend, to the downside. It's not just coming in here and drawing a simple trend line and saying that's a trend line. That's too easy. It's about looking at those recent swing highs and recent swing lows to identify market structure. That's what market structure is. It's really just market structure defined in one sentence is the larger movement of the chart. It's bad sentence there, but it's understanding the overall viewpoint in the market, right? If we're holding down under these recent swing lows, we're still in a downturn. Now, if we break above it, then things can possibly change, in which case we can look for a break above that swing high for continuation and a break out of that downtrend, right? So it's focusing on those swing lows and swing highs to create and have a market sentiment, right? By understanding market structure, you're going to have market sentiment. Having market sentiment, it will help you then create a trade plan. So market structure analysis focuses on understanding the broader organizational framework of the market, right? That's just like a Google definition of what it means. It identifies key levels, patterns, and trends that shape the overall market behavior. Traders employing the market structure analysis gain insight into the positioning of the buyers and sellers, supply and demand dynamics, and market sentiment. This is the last thing here is the most important thing here. It's identifying market sentiment, right? That's the most important concept. This analysis provides a big picture view of the market's organization. So that's what market structure is. Price action analysis is completely different, right? It's completely different. We already covered price action analysis in a different lesson, but we probably will go over again, I'm sure, in the near future. It is the third component of trading, in my opinion, and it basically helps us understand what the market's going to do on a smaller time frame. So it's about reading those candlesticks on a price chart, usually on a 5-minute time frame or 15-minute time frame, analyzing the open, high, low, and then helping us determine, is that breakout going to work, or is that breakout going to fail? Or is that breakdown going to continue, or is that breakdown going to just reverse, right? Price action is more about intraday stuff. Market structure is more about larger time frame stuff. That's how I view it, very simply put. Okay. Is this making sense? Can you guys understand what I'm talking about? The difference between price action analysis and market structure? Market structure, larger time frame, sentiment defining. Price action analysis is about intraday stuff and determining whether the breakout's going to go or if it's not going to go. That's the simple way to put it. So now that we understand that, let's move on to what market structure actually is. And this is going to break us into some actual charts. So market structure is about only looking larger that one time frame, the daily time frame. It's about also looking at those smaller time frames. So this is a Tesla chart that's overlaid. I believe this chart is from 2021, or I think it's early 2021 Tesla chart. And this is not obviously your traditional candle chart. They're just line charts. But what I want you to understand here is that you can see that a daily time frame may be in a very simple uptrend, right? A very simple uptrend. And yeah, it's super easy to get behind a daily uptrend. But when you want to actually create trades here and maybe get short-term setups, you're going to use primarily that 1 hour time frame. So let's look at that black line, right? This black line. And you can see that the market dynamic, or how the market works. So we see a push up higher and we hold that recent low. So we end up pushing higher and making a short-term high. We pull back, but we hold that swing, that recent swing high, right? As long as we're holding these recent swing highs, we are ripe for continuation. So we continue higher. We then pull back, and then notice what we do again. We hold that recent swing low. So we make a new short-term low. Here is you can see here, some people would call this a liquidity grab. Others would understand that we held that recent swing low and then we continued higher and pushed up higher off of that level. So the reason why I'm showing you this here is because we don't just look at market structure from one time frame. We're going to look at it from multiple time frames. And primarily, it's going to be on the hourly time frame. The reason why we do that is because this is what allows me to really create trades, at least from a day trading perspective. So if I see this, right, if I see a sort of price action over here, and we create a short-term high, and then again, we create a short-term high right over here. So here and here. Well, what am I going to look for? This is a continuation chart. We are holding swing lows, we are holding swing lows, and we are holding swing lows. This is ripe for continuation. So what does that mean? We're going to look for call entries above this recent swing high, right, for a continuation higher. Maybe you can look for a break and retest here for continuation higher. The reason why I'm showing you this chart is so you can understand here that we're using that daily time frame for trend analysis. Then we're going to that hourly 4 hour time frame, and we're looking at these recent swing term highs and swing term lows to identify entries. So maybe we'll look for a call entry above here for a move higher, right? And you can see here we bounce off at once, twice, 3 times, and as long as we hold these recent highs, we're still looking for continuation higher. Now, when does this sort of sentiment completely shift? Well, the sentiment completely shifts when we lose these short-term lows, right? When we lose these short-term lows, right, then you can see here we break under it, we retest it, we see a big aggressive move down, right? Likely continuing down. The idea here is we're looking at these multiple timeframes to conduct real, not only trend analysis, but also structure analysis, right? So what I want to do now is I want to go over to some actual charts. So let me break out of here. And I want to go over some real charts. So the first chart I want to talk about is this. Let's go over Amazon first. This is a really good example. So this is a trade we had taken on live from Monday, September 11th, right? This is a trade we all had taken. It was a breakout above 140. And I want you guys not only to understand why 140 was a key level, but I want you to understand why we're focused on calls on a name like Amazon, which appears to initially be choppy, right? This chart does look a little choppy in an hourly time frame. But let's go to the daily time frame first. So the daily time frame, the first thing I notice here is that we are breaking out of a long-term downtrend, right? So we broke out of a long-term downtrend in the daily time frame. Just because of we're breaking out of a daily downtrend doesn't mean I'm always going to be looking for call entries, right? Especially on a smaller time frame. I can look for put entries even though we've broken out of a daily downtrend. But I like this overall picture. So right now I'm seeing very clear uptrend on the daily time frame. So for me, that's a check for continuation on the daily time frame. Then I'm going to go to the 4 hour time frame. And I'm going to see here what's happening here in the 4-hour time frame. And this is really where I start to remember on our our slideshow, we really didn't get into too much structure analysis on a daily time frame. Structure analysis for me, and this you guys can go different ways. Like, I'm not going to sit here and tell you that my system and strategy is the best system and strategy. But what I will tell you is what I do. I don't really look at the daily time frame for structure analysis. I really look at the hourly for structure analysis. The reason why is because I most of my trades are day trades. So I'm going to be focused on the daily time frame 90% or sorry, the hourly time frame 90% of the time for my structure analysis. At least the hourly, and then maybe even the 4-hour. Okay. So let's go back to the Amazon chart and let's really dig deep into this setup. So we saw the daily time frame confirmed uptrend. That's a check mark for us. Now, what is the 4-hour time frame telling us? Well, the 4-hour time frame is telling us that we are holding a recent swing low, and we are now cleared above a recent swing high, right? You can see here, recent swing high. We are holding above the recent swing high. And as long as we hold above this sort of vicinity, right? This sort of, I can draw it properly here, not just a horrible line. I can draw it properly. As long as we hold above this sort of zone, right? Maybe this little zone of demand between 136.50 and 138, we are holding an overall uptrend structure, right? You can see here, we are holding swing high, we are holding swing high. As long as we're above that, we are ripe for continuation. What does that mean? That just means we are holding a bullish structure. Now, if we lose that 136.50, then we sort of, the sentiment shifts. Very important, very important. The sentiment shifts if we lose 136.50. That is where you might see a lot of long buyers stopping out. And that is why structure matters. It is because structure matters, because that is where you see shifts in sentiment, right? So if we lose that 136.50, it's very likely that pivot, right, is going to push us back down to 131.50, which is that next sort of bullish pivot. And if we lose that pivot, then it's likely to see even lower on Amazon. But for now, right, we are holding this recent swing high, and we are holding these swing lows, and swing lows, right? Now, understand one concept very important here. If this broke under these recent swing lows, I would not be interested in calls. Very simply. Why? Because this would be a sentiment shifting breakdown, right? If we didn't make a higher low here, right? If we didn't make a higher low here, right, above these lows, then I would not be interested in calls. In fact, I probably would look for put entries. Very simply, structure matters because it defines sentiment. Now, you could come in here and you could conduct trend analysis here. You can say, well, the trend is, right, we are holding these swing lows, right? We're holding these swing lows, and maybe we are approaching a little downtrend break as well over here, right? So that would also be another indication for call entry. But for me, I don't really like trend analysis in the sense where I would say, yeah, I'm going to buy calls here. That's not how I use trend analysis. I use trend analysis to help me define sentiment. This is extremely important. So if I see that we're holding these swing lows and holding these swing lows and holding these swing lows, that's going to be, okay, looking for call entries. So my 4-hour time frame confirms uptrend and confirms bullish market structure. So I have another check mark over here on the 4-hour time frame. Now what I'm going to do is I'm going to go to the hourly time frame, and I'm going to look for the same things again and again and again, but I am more analytical on the hourly time frame. Remember, on the daily time frame, I was really just like, I kind of looked at it for a second and was like, okay, hell yeah, this looks good, right? On the 4-hour time frame, I spent a little bit more time. I'll look at the swing lows, look at the swing lows, look at the swing highs, right? On the hourly time frame, I become more analytical. And the reason why is because this time frame is my bread and butter time frame. So what I'm going to do here is I'm going to see, okay, well, very clearly, right? We have, potentially a smaller time frame, a trend break, a trend flip here above 130, 139. And we have a recent swing high, right? A recent swing high here at 140. So, and we are holding swing low, and we are holding swing low. So what I'm going to look for here is I'm going to look for us to clear above this 140 level, right? I can't come in here and say I'm going to look for a trend break above 139, right? I can't do that. The reason why is because this trend line matters, but this recent swing high is more important. Trend analysis for me is not used for entries. It is used for sentiment. So I can't tell you that I can buy calls here. I can't do that. But what I can tell you is if we clear above these recent swing highs, we're probably going to test that 143 level, right? That is what I will see here. That is what I will do here. So I'm going to look for a break and retest above 140 for calls for a push higher into 143. And the reason why I'm doing this is because we have a very clear bullish hold here, right? We have a very clear bullish hold. We are holding these swing lows. We are holding these swing lows, and we are attempting to reclaim these swing highs for a move higher. So if you can see here, what ended up happening on Amazon was that as soon as this break occurred, right, as soon as we got above that 140 level, right, as soon as we got above 140 on the 15-minute time frame, let's go over the 15-minute time frame, you're going to see how quickly we saw 143. And the reason why we saw that, have you guys seen, crazy moves to the upside or crazy moves to the downside? Well, the reason why is because typically it's because people notice these things. When Amazon clears above 140, that's an extreme bullish sentiment shift, right? And that's why you see a lot of knee-jerk buyers coming in. It's because we are clearing above a very massive technical level at 140, and that's why we saw we're going to see a very quick impulse to 143. So you see here above 140, right? Immense breakout, right? And you're going to see big push almost over to 143, right? This is what happens, and this is what we're looking for. We're looking to right, if you go to the 5-minute time frame, you see how quick it was, right? Very, very quick push above that 140, break and retest, big upside move higher into 142. And if you want to know if your key levels have meaning, well, if you see high volume spikes over your key levels, it typically means your levels have meaning, right? And that's a very beautiful break and retest for upside continuation. Does this chart make sense? Do you guys kind of understand what's happening here, right? We are understanding that we are storing in a larger time frame. We are going from the daily to 4 hours to hourly, and then the 15-minute time frame. And then we're looking for it to hold these recent swing lows, right? And as long as it's holding the swing lows, clear continuation of those swing highs is going to bring us that next pivot, and that's what we're looking for. Now I'm going to show you a new chart here. I'm going to show you a Tesla chart. So you guys can see this, right? So I was short. Many of you guys were also short Tesla. Many of you guys were short Tesla, and this was a beautiful trade. Why would we ever watch Tesla puts, right? Why were we watching Tesla puts? I want you to look at this chart right now, and I want you to see, right, where our thought process was when we took Tesla puts on Thursday, right? So look at this chart. The first thing you can see here, go to the daily time frame, is that we have a downtrend, right? We have a downtrend. And this is not a broken down. This is not a downtrend that's broken. This is not a chart that looks like this. It's not like that, right? This is a very clear downtrend that we're still in here on Tesla. So the daily time frame tells us downtrend. That's the first thing. The second thing we see here is that on the 4-hour time frame, we have let's look at this for a second. We have potentially a bullish structure, right? A bullish structure. We can draw this out here. A bullish structure that is just starting to crack, right? The foundation of this bullish structure is just starting to crack. And why am I saying that, right? Why am I saying that? I don't have to see this red candle over here, right, to notice that we are perhaps breaking out of these recent swing lows. If I wanted to look for call entries on Tesla, I would want us to hold these swing lows at 261. But we just cracked under 261. You can see here, right? Look at this chart. I want to jump back. I want to jump back to our slideshow for a second. I know we're going all over the place, but let's jump back for a second to this chart. You can see here, right, that we are so this chart, for example, when we lose swing lows, right? So this would be a swing low. This would be a swing low. This would be a swing low. When we lose these swing lows, it's very likely we see a push back down to that next area of demand, right? And that is what we saw here in Tesla. Very important concept. When you lose the swing lows, we can't break above the swing highs. We lose the swing lows. Very likely we test those recent lower lows. So let's go back to the Tesla's chart now. And you're going to see here The first sign of a crack in the foundation here was the fact that we lost 261 clear support, right? Recent swing high, recent swing high, recent swing high. We came back down, we retested it. And initially, if you were trading this on Tuesday, the 19th, you have no reason to buy puts on Tesla. You have no reason to buy puts on Tesla because it's still above that recent, it's still holding these swing lows. Then when it lost that 261, right? You know that this is now, right, a downtrend, and we can now look for put entries as long as we are under 261. So what we're going to do now is we're going to go to the hourly time frame, and we're going to see if we also get a similar sentiment on the hourly time frame. And on the hourly, you're going to see the same thing, right? We see us, okay, losing a very important swing high and swing low. So that swing low, swing high, we just lost it, 261. So at this point, as long as we are under this technical resistance now, we can look for puts for us to move back down to 240, right? And that is exactly what we did. So if you go now to the hourly time frame, you'll see what happened was that as long as we maintained under 261, under this sort of supply here, we were okay to hold puts on this. So you'll see now, right? Very beautiful structure to the downside, right? We came back down, we retested 261 at the open, and we maintained below it. And then we saw a very quick, now look at this for a second, right? Look at this for a second. Very important. If we lose, so we just formed another level here, right? So we just retested 261 and we came back down and tested 254. Now, if we lose 254, we can actually day trade this now to the downside, right? We can now, so we just took a swing trade over here, right? Because we got puts over here. We lost that recent swing low. We lost that recent swing high. We can actually now day trade this under 254, right? And let me ask you a question. Would you guys look for puts here under 254, or would you look to bounce this for a move higher? What would you do here? Let me ask you a question. Based upon what we're seeing here on the daily 4-hour hourly structure, are we looking for puts or are we looking for calls here in Tesla? What would you guys be looking for? Puts. Exactly, right? Exactly. Obviously, this is hindsight's 2020, but the reason why is exactly it's a downtrend. We lost a very key market structure. We are looking for a put entry. The only reason we can look for calls on Tesla is if we get above these recent swing highs, 261, and reclaim it. That's the only reason. But now you can look for continuation. So you could have come in on Friday and said, screw it. This chart, right, is holding very clear bearish structure, right? This sentiment is bearish on the hourly time frame. It's bearish on the 4-hour. It's bearish on the daily. We have a clear level at 254, recent swing low. If we get above this level, we can possibly retest where, right? Back into 244, right? Back into these previous highs. And you can see here, that's a clear level of demand here at 244 because we have a multiple interactions off that level. So if we get under this 254, very likely we're going to see 245. So now if you go and play what ended up happening on Tesla, remember this, guys. Remember Tesla was one of the strongest names in the market on Thursday? And then all of a sudden it became one of the weakest names in the market on Friday. Why is that the case? The reason why was because of the bearish hourly sentiment shift, right? That is what happened here, right? At least in my opinion, my view, we see this over and over again. Why do strong names turn weak? It's because it failed to get above 261 the day prior, right? It failed to break above it. And that's why we don't really see a lot of bulls stepping in because we understand, right? We understand that it failed above that recent swing high. Therefore, there is no reason to go long on Tesla until it possibly retraces lower. So what ended up happening on Friday was that we saw a very aggressive downside move the whole day, right? The whole day, it was just a melt day. You can see it tried, look at this, it even tried to push back into supply again. And you guys know there's no reason, even though we saw a little bit of a gap up in the pre-market, that gap up is meaningless to us. It means nothing. We are still below major supply. The sentiment is still bearish, right? And therefore, we saw a very aggressive push, right? As soon as we broke that recent swing low, as soon as we held below 254, we broke under 252, we saw it move back down into 245. I'm not going over entries here. I'm just going over sentiment, right? Understanding why we look at certain setups to the downside, or why we look at certain setups to the upside. So this is just a super, super clear chart. And now you can see, right, how well this chart worked out, right? You can see over here when we first look at the chart, when we first we're analyzing this chart in the hourly time frame, you can see that it was just starting to show, right, cracks in the foundation, right? It was just starting to show it. Then as it played out, you can see how beautifully it worked out in the end. It's because we saw that massive trend flip, the sentiment shift, and therefore a big pushback down into 245 demand. Is this all starting to make sense now? You guys kind of understand what's happening here. Does this make sense? Is this helpful so far? I know it's a little bit confusing, and I hope it's not too confusing, but this is probably one of the most important topics, is understanding kind of like how you approach the market, because this is how you approach the market. It's not just charting and just throwing levels on your chart and saying hell yeah, we're looking for calls above that level and puts under here. That's not how the market works, right? It's taking it a step forward and breaking down what is happening and reading into these larger timeframes, right? Going from the daily to the 4-hour to the hourly, reading what's happening here, seeing how we're interacting with these key levels, and then looking for those trend flips. One last chart I'm going to show you guys is this SPY chart. Okay, let's look at what's happening here on this larger time frame. This is a larger time frame trade here, right? You can see daily time frame. We are breaking above a downtrend. We broke above it. We held that recent swing. Look at this right here, right? We held a recent swing low in the daily time frame. Beautiful, right? Let's go to the 4-hour time frame now. 4-hour time frame. Okay, will we be looking for calls or puts here? Well, the only reason we can look for puts here in the 4-hour time frame will be maybe if we lost these swing lows. But for now, we are holding these swing lows. Therefore, we are looking for continuation above swing highs, which in this case would be about 420. So if we get above 420, we should see a big upside push into 431. Hourly time frame, what do we see here? Same thing, right? We are holding swing lows. We are holding swing lows. We have a swing high here at 420. What we can do here is look for continuation above 420, right? That is what I look for here. The reason why we held swing lows in the daily, we held swing lows in the daily, we held swing lows on the 4-hour and the hourly. Therefore, we should look for continuation above 420 for calls. What ended up happening here was a very massive daily breakout. Now, this is too far back for me to use 5-minute time frame here. TradingView won't allow me to go back that much in the 5-minute time frame. But you end up seeing what happened here was a very aggressive breakout above 420 and a massive push to the upside, right? This was the only chart that I showed you guys that was a trade I actually didn't take. I did not take this trade. This was just a chart I'm using for analysis. Understand the concepts here. The concepts are that we are starting off in the daily, we are going to the 4-hour, we are going to the hourly, and we are looking for these sentiment shifts in the market. And as long as we are above that sentiment shift, right, as long as we're above that downtrend, as long as we're holding these swing lows, we are looking for continuation to the upside. That is the concept here, right? Going back to Amazon's chart, same thing, right? Look how beautiful this is. You can see here above 140, right? We held those swing lows. We pushed above swing highs. If we're likely going to retest these recent highs at 143. Okay. That is my stopping point. We went over 4 different charts. We went over everything I wanted to cover in my slideshow. So that is where I want to stop for today. What I will do is I will answer, the top 1 or 2 questions, and then we'll call it. So we'll figure about 3 more minutes. 6:45. That'll be our stopping point. So if you guys have any questions, yes. One thing I want to show you guys is somebody asked in the chat in the Discord earlier today, and I said I would do this. So I want to show you guys this very quickly. Moving averages. So you have moving averages here on TradingView. So let's just say you want a 50 moving average. So you're going to search MA, and you're going to add a moving average, right? For some reason, I'm not sure why it's not showing my basic moving average, but I already have it here, right? So search moving average, right? Then add it to your chart. And what you're going to do is you're going to change the settings to whatever length you want. But what you can do here is change the time frame. So let's just say that you're on the 5 minute time frame, but you want to see where that daily 200 SMA is, right? So what you're going to do is go to the settings icon, change the time frame to daily, and now no matter what, it's going to show you whatever time frame you're on, it's going to anchor that moving average to the 200 to the daily time frame. So if I'm on the 4 hour, it's still the same value, right? It's going to be 203.73. If I'm on the weekly, it's going to be the same value, 203.73. If I'm on the 15-minute, it's going to be again the same thing. So that is how you use daily timeframes on smaller moving on smaller timeframes. No worries, Demetrius. How often throughout the day do you adjust your levels? I usually don't adjust my levels. My levels are usually throughout the day, they're usually about the same. I adjust my levels daily. So they're adjusted daily, but usually throughout the day, they don't really change too much. Especially if it's a key level, right? Like Tesla, for example. If I was gonna go over the Tesla chart, the same trade we had taken from Thursday, Friday, the levels are the same here, right? I mean, maybe the only level that I would have added would have been maybe that swing, that open level, all right, 252. All right, that's the only level I would have added here. But besides that, the key levels stay the same. Okay. The weekly, Sean, I do use the weekly time frame sometimes. So remember I talked about the sort of the multi time frame analysis. You can incorporate the weekly time frame into your multi time frame analysis. I just don't do it often because usually the daily time frame has enough data for me to work off of. But if I'm looking at a chart like Target, for example, where Target, I want to have a bigger picture here, right? Well, I'm going to use that weekly time frame. So if you want more data, use the weekly. But for me, 9 times out of 10, I don't even really look at the weekly, right? It's only if I need to see more data. In this case, that would be a chart where I would want to see more data. Okay. All right. Awesome. I'm gonna end it here, guys. I know there's a million questions that I'm not answering, but I do have to pop off. I hope this is helpful. I hope you guys learned something from this. If you did, let me know in the chat. Let me know in the Discord chat. I'd love to see it. If you guys want more lessons like this, more quick right to the point topics, we will do it. I like doing this because we just get right to the point. We talk about trading stuff. And I think hopefully you guys find it helpful. So that's that. Appreciate you all. Again, make sure you guys post in Discord. Let us know what you think about it. And if you guys want us to run different topics or different ideas, let us know. We can cover whatever you guys want. Remember, you guys decide what we do, right? So you guys have a big impact. The reason why I did today's lesson was because a lot of you guys asked for it. So if you guys want more stuff like this,